Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And if you're new to the market guys weekly report, let me explain to you what I've done here from last week. Each and every week I put forecast lines that look just like what you see here. This diagonal line represents where I forecasted the market from last Friday's close, and I said that we would reach the target right down here, which is the end of that line. And you can see here we hit that target right on Tuesday, and it bounced right from that line. I mean, right to the penny there it went, and then we bounced off of that. Now, the technical charts that I look at are candle charts, and they're extremely reliable. It doesn't take much to learn how to read candle charts. Of course, it's going to take some practice and some instruction, but there's no fancy magic trick here. I'm analyzing straight price and volume. And now that we've hit this target, I can tell you that we closed Friday on strong positive volume. So what I think we're going to see for next week is I think we're going to see a test of the high that we have back here. So I'm going to draw a line that represents that resistance point right there. And then I'm going to draw another line showing what I believe the forecast is going to look like for next week. So I think Monday and Tuesday we could rally up to test that resistance. And I think we will, because that strong positive volume on a green candle tells us that today the buyers are motivated. But I don't think there's enough economic news out there for us to break out over that resistance. So I think we're going to pull back towards the end of next week. So there's my forecast. And if you're using this as a guide, then please take a snapshot of this chart. You can compare it as we go along each and every trading day next week. And then I'll report again next Friday. Now, if we look at the S&P, which is what I look at in the spiders here, you'll see I've done the same thing, left my lines from last week's report, and I said that we would move lower to hit this target line, which is right around 214.97. We did that almost immediately in the beginning part of the week, and then even Thursday we came back down to that level before bouncing. Now the S&P is a little bit more broad-based than the Dow. We have 500 stocks here. So what I'm going to do for you right now is I'm going to remove these lines. I'm going to back up a little bit, and I'm going to even look at a weekly chart here, because the weekly chart tells us a lot of information. We are over this resistance point, but as you can see, we have 1, 2, 3, 4, 5, 6 up candles in a row here, and the volume is dropping on the weekly candles. And that's important, because you'll notice that in the past the Dow does not usually go more than 6 green candles in a row, maybe 7 green candles in a row before pulling back. So next week my forecast is going to be pretty similar to what I had in the Dow, with one exception. I think we're going to move up just like that, and I think we're going to pull back to fill this gap that was left today. A trading gap is nothing more than a price void on the chart, and we have a couple of these. We have one here, we even have a small one down here. Gaps fill about 90% of the time, so I'm going to leave that line up there for next week as a forecast line so you can see how well the charts work once again. Now, if we look at a more broad-based index, and that's in the Russell 2000, you'll see we went up again. My forecast was that we would move up to test resistance. We did, and then pull back, and we did. Now the Russell 2000 is breaking out over that resistance, so I think what we're going to see for next week is very similar to what we've seen in the Dow and the spiders, and that is, I have to adjust my chart here actually, I think we're going to move up just a little bit, again, early in the week, and I think we're going to pull back to test that former resistance, which is now going to be current support. That's called role reversal. Former resistance, once broken, turns to support. So that's my forecast for Russell 2000. Now, finally, I'm going to take a look at the Qs, which represents the Nasdaq market through the power shares. Again, QQQ is a ticker symbol, and everything that we're seeing here is similar to the next index that I've already highlighted. So I think we're going to do the same thing with the Qs, come up a little bit, and then pull back to fill the gap, just like that. These gaps, again, fill 90% of the time. Now, if you'd like to learn more about gap trading and role reversal and other concepts I talk about all the time, just go to themarketguys.com. That's our front page right there. You can click on the video tab, and that will bring you to a video library that has very short videos called Market Shots. And if you scroll down, you'll see that there's many different topics that we talk about. Again, here is gap trading right there. Here is the role reversal right here. Again, 5 to 6 minutes of video education is something that you could fit into any schedule really, and you do it in your own time. So that's what we offer to the public for free. I hope you enjoy it. I hope we've added value for you. Remember, go to themarketguys.com. We are your one-stop shop for financial education. Have a great weekend. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.